Remember Christmas as a kid when you're like 8 or 9 years old? Christmas Eve, you're that excited to see if Santa's going to bring you your presents. Well, that's pretty much like it is tonight for me and other tax accountants around the country. We're that bloody excited. I'm wearing my favourite orange shirt, which is excitement time. So, budget night, here's the wrap for small business, brought to you by the Tax Champion and Paris Financial. So here we go. They've reinforced the small business entity turnover to access all those concessions for small businesses, and they've increased the turnover from 2 million to 10 million. That's been touted in the last budget, and they've reinforced it in this budget tonight. The next one is an absolute cracker for small business. It's the best one they've put in place. The government, for a couple of years, they've done it for 2 years and are doing it again, extending this to the 30th of June 2019. And that is that if you've got an asset as a small business, so less than $10 million turnover business, if you're buying an asset that's less than $20,000 without the GST, you'll be able to write it off immediately and get a cash benefit from that straight away. And I'll give you just a quick example of this so you can see it on the screen, just to see the cash power of this, because it is a good little kicker for small business and can be really relevant coming up to the 30th of June. So I'll just show you this. So that's an example there of the incentive we're talking about. So if you buy a $10,000 asset, ex-GST, at the company tax rate 27.5%, you'll get a cash refund from the tax office of $2,750 immediately in the year you buy it. Usually without the incentive, that $10,000 asset has to be, will receive a cash refund of $550 per year. The reason is because the $10,000 asset needs to be written down as depreciation, which is $2,000 for 5 years in a row, and the cash amount coming back, as I said, is $550 per year. So over 5 years, you've got the same benefit there, $2,750. It's the same cash amount over 5 years, but the power is getting the cash immediately, and it's excellent for cash flow for your small business. So that's a ripper and will be good coming up towards the 30th of June. There's not a huge amount in this budget for small business. They're going pretty easy, I reckon, folks, because we've got an election next year, so they always take it a little bit easy. They're reducing the company tax rate over the next few years from 27.5% for trading companies at the moment, and they're gradually going to bring that down to 25%. Don't think there's a huge amount in this for small business. From a cash flow perspective, at the moment it's 2.5% benefit, down from 30% to 27.5% last financial year, and the next one in 2018, this one and also 2019, but it does affect the paper gold account, the franking account. So nothing fantastic there, I wouldn't have thought, for small business. The streamlined GST, they've spoken about a streamlined GST where you basically fill out 3 boxes on a form rather than sort of 4 or 5 boxes on a form. I don't think this is good for small business. It probably just brings in a bit of lack of discipline, really. People just throwing numbers onto a form, 3 numbers. The discipline of doing your quarterly BAS and filling out those couple of extra boxes, which are usually capital acquisitions, and the GST amounts on both sides, payable and what you're getting back, is a good discipline for small business, whether you're a business owner or whether your bookkeeper is doing your BAS. So not much in that one. The government's put in $20 million into what they're calling small business hubs for export. It's a spit in the ocean. Okay, the ocean is a bit bigger with that spit, but it really is just a spit in the ocean. But look, it's out there, and if you're exporting, there might be something in there for you. Our old favourite R&D, they're putting some auditing bucks into this. So we've got a lot of clients who are innovative, and they do access those R&D tax concessions via R&D tax specialists. They're getting more auditors, putting more money into tax office auditors and industry auditors to make sure those things are running properly, so nothing wrong with that. I've got the killer gripe here, getting slightly outside of small business, but the Australian government's putting a heap of dough into the multinational anti-avoidance laws and another thing called the diverted profits tax. So if you follow the killer series, you'll find out that this is, you've got to compliment the Australian government in going this way, and they're punching above their weight with trying to tackle multinational tax. But follow the killer series and there's a little more to that, but at least it's something. Here's a big one for small business. They're going to tackle the black economy in a few ways, and got to be good for small business. The more they can make the paperwork better and knock out the cash in small business, the better. The way they're doing it is being more stringent about looking at ABNs, more stringent on directors' responsibilities in small business, and to track those things from the cash economy or black economy perspective. So that's got to be a good thing. There's just too many shysters out there who get away with too much, and your genuine growing small business person probably suffers from that. There's a thing in this budget which I reckon is a real cracker for the cash economy or the black economy. They're looking at making it illegal to take more than $10,000 cash as a payment for anything. So that is a beauty. I mean, they do it with moving money from bank accounts overseas. You've got to declare it if it's more than $10,000, but it looks like they're going to outlaw cash amounts for a payment of anything, goods and services in the economy for more than 10 grand. Got to be good. And they're going to also expand the taxable payment system, which they brought back a couple of years ago in the building industry, and they're going to expand that a bit further. Again, it's a good thing because they're just tracking a bit more of that paperwork through some of those industries. So that's about it for small business. There's not a huge amount there. That 20 grand immediate write-off is a good one. They're going to crack down, obviously, on the cash economy, crack down a little bit on R&D. So that paperwork has to be really good because they're going to be looking at that. But obviously, many of our clients still want to access that. So not a lot in it, folks. I just will mention a couple of things before leaving. Personal tax rates, if you're on the tax rate between 87,000 and 90,000, so that little 3 grand amount there, they're increasing the threshold of the 32.5% tax bracket up from 87,000 to 90,000. So there's a little kicker there, and that's good for small business. There's a couple of bucks in your pocket there. The final thing is superannuation, and the Dazzler, Darren Foster's our private wealth planner, and he'll have more to say about this at Paris Financial. But at the lower end with super, or some of the younger people, they're giving you a choice about whether you want insurance in your super fund. As I said, the Dazzler will have something to say about it. I'm just the man in the street when it comes to insurance, but I don't think that's very good because that little bit of hidden insurance for people who are young is quite valuable as they get older, and we all need a bit of life insurance. And the other thing about superannuation is they're trying to ban exit fees. So moving out of a super fund, trying to ban those exit fees. So that's a good thing for the superannuation side. There you have it, folks. That is the small business tax changes in a nutshell on budget night, the most exciting night for tax accountants. Time to go to bed soon. So if you've got any queries on this, drop us a line. And we'll see you next year with my orange shirt.